I was listening to CNBC the other day, and Jim Cramer said that although Tesla got downgraded by two different Wall Street analysts, price action has remained resilient. We're going to watch this video before we get into the analysis, in which long-term bull Dan Ives, he's the managing director of equity research at Wedbush Securities, believes that Tesla is getting and is setting up for a strong Q4 based on its recent delivery numbers. Despite comparisons to other companies like Rivian, Tesla's year-over-year growth remains strong, and its scale and scope are unmatched globally. Let's go to the clips.
Dan Ives is with us, Managing Director, Equity Research at Wedbush Securities. Dan, thank you for being with us. I mean, we got these delivery numbers from Tesla, and when you look at them sequentially, a little disappointing, but still year over year, you're seeing the growth. What did you make of it?
Yeah, I mean, Nicole, I just view it year over year. It was strong, especially relative to this environment. The price cuts are working, specifically in China. And if you look at the factory downtimes, this sets up what I believe is going to be a very strong Q4. And I think that's why the street shrugged off these numbers, which clearly were disappointing.
You know, when we talk about, people start comparing other makers, like Rivian, for example, to Tesla, because they get excited and they're seeing Rivian on the road now. But, you know, Rivian delivery 15,000 plus to Tesla's 435,000 plus. Rivian's probably going to come out with 52,000 vehicles this year versus 1.8 million for Tesla. I mean, is Tesla still, I mean, I know BYD is on its heels too. Where does Tesla stand? I mean, to the people who are the naysayers for Tesla, what do you tell them?
I mean, the scale and the scope is unmatched globally. I think when you look where Tesla is, I think, look, one of the biggest risks, if you look at the thesis, was GM, Ford, Detroit. That was going to be competition in the U.S., but now this UAW debacle, that's actually been a win for Tesla. I think when you look in China, price cuts, that price war has happened, BYD, NIO, and others, but Tesla's actually gained share. And I continue to think going into 2024, they're in a massive position of strength despite a shaky macro.
And when people say that Tesla trades more like a tech company versus an auto company to try and justify the valuation, I mean, you have a 350 target. It's at 247 today. Tell me why the valuation is justified.
Well, I mean, Nicole, you've talked about this a lot. I mean, we view it as a disruptive technology player, not an auto company. I think if you look even at the sum of the parts that's now starting to play out, supercharger, battery, ultimately FSD, AI, what separates Tesla from others, it's really the software and what I view as the secret sauce, which is non-hardware. And that's why more and more, I think investors are starting to understand this is not an auto company, it's disruptive tech. I believe it deserves that multiple that I think it continues to attain going 2024.
Right, right. I mean, that's the whole point. And that's why, you know, I ask you these questions because I get bombarded sometimes like, oh, full self-driving is so far away. Batteries, they don't really make batteries. They do it in collaboration with other companies. They're not really a battery company. They're not an AI company. It's just an auto company, and it's not worth the current price. You know, do we have actual statistics of any sort of how many batteries are made, that they really are growing in AI, that there really is potential?
I mean, look, I've spent a lot of time at Tesla factories around the world, as well as other factories. And that's why I think it's very easy to be bearish on Tesla sitting there in your spreadsheet in New York City. I think when you see what they're actually doing, that's what separates them. And I think again, that's continued to be a differentiator.
Yeah, yeah. I mean, the Cybertruck is coming. That should be an exciting addition too, right? When you talk about the orders that line up for that, right?
Yeah, look, we believe production begins later this year, deliveries into next year, and that's just going to be another. I think when you look at their product portfolio, that's just going to add to the growth. It's going to add to the moat that I think continues to play out over the coming years. Look, obviously, we're going through a white knuckle period in terms of multiples, in terms of disruptive tech. I think we go into next year. I view it that this is kind of the next phase of the Tesla growth story.
All right, so you can see on the macro picture, we have this huge head and shoulder. In recent months, price retested the shoulder at $300 before pulling back. However, you can't deny that price is up roughly 150% since the hitting this daily buyer's level at 105. And in the process of moving higher, it's formed other levels of buy interest. The most recent buy level that was formed was back in August, and price bounced off of that level in late September, and it's moved up nicely. Now I'm going to take this weekly sellers level off the chart because after price breached it and closed above it, it invalidated the level, and we can see that on the weekly chart. I only left it on because although we had a slight close at the upper portion of the zone, price did collapse the following week, but I'm going to remove it. Now, price remains in this tight range for Tesla of $60. Going back down to the daily chart. Look for a first target and resistance to come in at 280, but look for a medium target at $300. Again, retesting that shoulder formation on the monthly chart. Thanks for watching. Subscribe. Please like the video.